Welcome to the Elevate Collection podcast, Brad. We're so happy that you're here today.
Thank you for having me.
Gosh, you're welcome. You like went, thank you, Brad. Looking so serious. But no, guys, we're welcoming Brad to the podcast today. He is with Clubhouse Capital. What is Clubhouse Capital?
Yes, so Clubhouse Capital, similar to Elevate, was probably 15 years in the making without me even realizing it. But playing baseball at Bowling Green in Ohio, a teammate of mine came to me about a year ago and said, hey, I've been working in baseball for 2 years, and a lot of the guys that I work with are asking about this alternative asset class of investing in sports and in different teams. And I had invested myself personally a few years back, and so he said, do we want to start something of our own and just do it? And so yes. And so probably a year in the process of just figuring out how we make this work. Our sole mission is to bring business leaders and athletes together, create a community, and invest in assets across sports, media, and entertainment. I think all business leaders want to be athletes and all athletes want to be businessmen. So we feel as if we can bring them together and do some really cool things and create some generational wealth for everyone involved.
You're going to have to go back for a second and give me some definitions. You said a what asset class?
Alternative.
Okay, so what is that?
So your traditional assets that you and I would, or your general investment would think about would be stocks, bonds, equities, public traded companies that you can buy on at the stock market. Alternative in this sense would be sports teams, sports leagues, companies that are pre-IPO or haven't gone public on the stock market yet, and they're looking for money from investors that reach a certain threshold, knowing that there's the risk involved. They are willing to put up their capital to help them grow, to ultimately take that point where they can be bought by a larger company like a Microsoft or a Nike.
Whew. That's a lot. That's a lot. Okay. So I think to start then, Irving, to continue this conversation, is where would one even start in this space? We honestly, you just take the calls from our management advisor and do what we're told. But where do you start?
For me, I just had a curiosity, right? Like you would see some of these companies going to public and you know what, it was actually a sheet that had the first investors of Uber. And it was a gentleman, he invested, I think, $5,000. Well, they went public, that $5,000 or $25 million. And so
We're doing something. We're doing something wrong.
So that just led me down a rabbit hole and ultimately ended up meeting a gentleman who leads a venture capital firm for data grading through Dayplayer. And so I invested with him personally, and then being the small fund, I've gotten really close with the general partner, who's a really good friend of mine now, and he kind of showed me the ropes of how they would look at deals, how they would evaluate deals, and I would go to a couple of events with him, network, the next thing you know, it blossomed into a much bigger Rolodex of contacts that I had in my contact list. And when it came time for me and my business partner Taylor to do this thing alone, I had a pretty robust list of people that I could call and bounce the idea off with.
Amazing. How do you feel like your network and Rolodex has truly helped your success?
I think it's not who you know, it's who knows you, right? And so by me being able to stay in touch with these people and just out of just genuineness, right? I didn't get in touch with them to want to ask for money in the future or want something from them. I was genuinely curious as to how you make it in this space, how did you get in this space, just from my own personal knowledge, right? But then I think when it came time, I'd built up enough goodwill when it was time for me to ask them for a favor, just advice. They were willing to listen and offer that advice without expecting anything in return.
I love that. When it comes to that, your network obviously being able to expand what you're doing, how you believe that going this avenue outside of just the natural trajectory of like the finance portion, like investing in this side of things, how do you believe that can contribute to someone creating a larger impact outside of course, we receive the financial, increase from it, we get that, but how can that make impact?
I think in a variety of ways, right? Being a former college athlete, I think about not only the money aspect of it, but what does my athletic background, what expertise can I lend to a team that we ultimately buy into, right? And I think by me playing college, there's these professional athletes that have played a lot longer than I did, and I'm sure they have a different perspective on how an organization is run, or how player development should be run, or how coaches should look at certain things. And so our whole mission is, if we can bring those athletes in and help them give that expertise and give their opinions to the teams that we ultimately have a piece in, I think that is one way to build legacy. But then also, it's deeper than just money, right? So if you're able to give all of those returns that you got down to your family, their kids and their grandkids, and really make a name for yourself outside of just your generation, I think that's where the impact is really going to be felt. I mean, if you look at the statistics, I'm sure you know them. We're just working on who your clientele is, but a lot of athletes, unfortunately, have financial issues once they get done playing. So if you can invest your money strategically while you're playing, and then ultimately when you retire, start to see the returns of some of those investments you made while you're playing, the sky's the limit for what you could do post-career, and then ultimately for the generation that you would come after you.
You don't have the fear that one investment could take all that away from you, like one misstep in any of those strategic investments. Like there's so much risk involved, and when you're risking, to me it looks like you could be risking your legacy, like you could be risking everything that you're hoping to secure. How do you combat that thought? Like even like if I were an athlete, right, looking to diversify my portfolio, looking to make sure that I have something set up for myself and my family after the league, after that's all said and done. But I have this fear that if I make this wrong investment, then what?
Yeah, I think that's part of it, right? Like, maybe that is what draws some people to this space.
Is this a toxic behavior?
It may be, but I think for us and from my experience, that network goes back to the network, right? And so if we're not taking a majority stake in the team, like we're taking 5, maybe 20%, depending on how big the team is and what league is in. And so for us, it's who are we partnering with that's going to own that other 80%, right? And what is their background, and what is their history, what is their view on how they want to run the team and their goals and their aspirations. And so I think a lot of the risk is offset by who we're going into business with and who's advising us on the transaction.
Okay. I pick up what you're putting down. That just...
I'll give you a perfect example.
Thank you.
So there's a deal we're looking at now. It is a collection of soccer teams. So it's 6 teams across... Soccer in America, football in... And so it's 6 teams, and it's going to be rolled up under one business. But the gentlemen that are running that business have been managing soccer teams for 30 years. And so when they've looked at the teams that they're going to buy, they've strategically bought teams, or going to package up teams that are maybe earlier stage, need a little bit more development and help getting to that ultimate place they want to be. But then on the other end, there's teams that are solid. Year after year, they're going to make money. They're not going to lose money. They've sold thousands and thousands of season tickets. And so they're able to offset maybe some of the more riskier investments with a stable asset on the other side. But they pair that with industry leadership across the board. So the board's going to be folks for TaylorMade, Nike, Fenway Sports Group. People got it done before. And so when you're looking at that and looking at the price that you're getting in, it's like, okay, for that amount of money, I'm willing to take that risk just due to the money that's involved, number one. And then number two, who are you trusting to manage that money to ultimately get a return? And seeing that they have combined 100 years of experience in the sports industry managing teams, like I feel okay about that, right? Like I feel good about it, knowing that who they are, who the referral came from, and when you bet them, everyone sticks rolling about them. But then I could go to our investor and say, hey, we have this investment. Here's why I feel good about it. Here's the numbers. But ultimately, you can trust me that it's a good investment because I did my due diligence, not only the financials, but the people that are behind it.
How soon do you see that money come back to you? Like, what are we talking like a 2-year investment, a 5-year investment? Like, is this long-term, short-term? both?
Yeah, I think it could be a combination of both. Like this one, I mean, their goal is to take it public in the stock market. And so they're looking to do that in 6 to 12 months. So that's a pretty quick turnaround compared to any more traditional alternative investment or venture capital investment. But typically, like private equity firms have a whole period of anywhere from 5 to 7 years. Venture, if you get in early, like the guy with $5,000 check at Uber, it probably took him, 6, 7 years to see a return on that investment. So it varies depending on the stage of which you get in. But obviously, the earlier you get in, the riskier it is as well.
That's true. One of the reasons we created what we created in terms of verticals, right? That we're real estate agents with a podcast and a lifestyle brand and clothing and all the things that we're doing is because we want certain things to happen in our life that we want to be able to fund, right? Like, who doesn't want to go to the Super Bowl? Who doesn't want to network in Formula One event? Are there lifestyle benefits that come with investing in an alternative asset class?
That's such a cool question.
100%. And I think we touched on legacy when we didn't kick this off, right? Being able to sit in the owner's box and say, hey, I own a piece of the team. Like that opens doors that you can't open unless you're on the team, right? And so we think about legacy and who you're able to meet in those types of settings. I think that goes a long way for not only personal development, but legacy building, and who knows what can come from those conversations, right? We're just talking about sports now, but if there's a powerful government official, that should be the boss, who knows what that can do for those types of relationships. So I think it opens up a lot of doors that otherwise wouldn't. But there's definitely a lot of events I think that can come from being in the space.
Okay, so you're kind of not only like building your long-term legacy through investing, but you're also kind of buying a seat at the table.
Well, yeah, I mean, doesn't it sound, I guess, the best when you say you're buying a seat at the table? But I mean, I think you are, right? You need to be at those tables to be successful. And I want to be at those tables, and I want to bring our investors along to those tables. Because at the end of the day, it's all about building a legacy and leading the legacy. Not only for me, but my kids and my kids' kids, and I'm sure our investors feel the same way.
I have a personal question. So, talking about buying a seat at these tables, right? How does that make you feel being a black man? Does that provoke a different emotion when you are sitting at those tables? One, and two, the thought of buying your seat at that table.
It does provoke a different thought, and I think about the people that came before me that couldn't get a seat at those tables, and how do I carry myself in a way that's going to allow for future friends to get a seat at those tables, right? I don't want to be the one that messes it up for the next 33-year-old black man trying to do something that I'm doing. And so that heavily weighs on me when I'm in these rooms or I'm at these tables or I'm at these events, because there's not many that look like us in those rooms. And so I'm very conscious about how I carry myself, how do I act, how do you dress. But I think it's super important that we continue to try and knock down those barriers. So it's not just 2 or 3 of us in the work. It's, we are the room. Right? And these are our rooms that folks that don't look like us are trying to get into, right? And so that's the ultimate goal. I think this is just a small part that we're trying to continue that legacy. I know there's other folks out there that look like you and I that are doing the same thing, but there definitely needs to be more of us.
I love that. There was Jordan and I attended the Sports Power Brunch during Super Bowl week, and it was so incredible. And one of the things that stood out to me, I think it was Swin Cash that said it, about legacy isn't just like what you're creating, like yourself, your family, and like the generations that come behind you that are in your bloodline, but it's you making room at the table and inviting somebody to sit at the table that looks like you, to making sure that they know that opportunity is available, it's theirs, they're tied up to it. So I love that you said that for the friends that come after you. I think that's really, really powerful. In this process, what have you learned about yourself? Coming from being a collegiate athlete, tech, and then now on the investing side, like what have you learned about yourself that you wish you could have learned sooner?
Take risks. But at the same time, I think being nervous about taking those risks is important too, right? Because it's new, it's different, something that you haven't done before. I think if you're able to go into something brand new, just not nervous, then there's something wrong. I think being able to go into this and say, okay, we talked to this person, we talked to that person, and still being a little nervous about it, but still deep down inside knowing that it's the right decision. I think looking back on this, I'm able to tell myself I could do anything up to my plan too. And I think I probably knew that before, just being an athlete and being a little type A and stubborn. But this really solidified the fact that, yeah, I can do anything I set my mind to. And I think I've whether it's tech or sports, have the network to do anything that I want to do, just due to the genuineness of what we're looking to do with it and the relationship that I built.
Is there anything in particular that you would tell the future generation of Freds to look out for when they're making that transition from athlete into, or not, like, let me start that over, because there's not really a transition time now when it comes to like collegiate athlete to like investor, because you're coming in now in the wild world of NIL, they're coming into money while they are collegiate athletes at a significant amount of money. What advice do you give that collegiate athlete now?
NIL being the Wild West, I think they're businessmen and women in college, right? I'm sure they're being approached for opportunities and they're seeing things that I could not imagine when I was 18 or 20 years old. So I think staying curious, number one, having the right people around you. It probably took me a while to realize that maybe people that I grew up with weren't the people that were going to take me to that level that I want to go to. And so I think as an 18, 19, 20-year-old kid in the NIL age, making hundreds of thousands of dollars, possibly millions of dollars, you really have to be careful about who you're surrounding yourself with at probably a much earlier age. And realizing that, Jim and Susie that you grew up with, they may not have your best interest at heart. So I would say just really be curious about who's around you and really try and keep people around you that are even doing better than you are. Because they've seen it, they've experienced it, and then you'll be able to lean off of them and learn from their mistakes so you don't make those same mistakes.
It's good stuff.
We talk oftentimes about a circle check. There are times and reasons and seasons for people in your life, but we are always having to do a circle check as we continue to grow and change and who we are, especially like as wives and mothers and business owners. And I'm sure it's the same for you. Like, the people who I need in my circle now are not the people who I needed even a year ago. Well, we are completely different people now than we were 12 months ago. And I'm so thankful for that. But I'm thankful that we continue to find people to enter our circle, like you and in your circle of friends, are now coming to our circle of friends, and you're further the journey than we are, and you are sharing that information and making us better. Like, how do you make sure that you're continuously like finding people who are better than you to help you level up? And how are you handling the emotions and the grief that come along with maybe taking some of those people who are in your circle out?
I think it's just the ultimate want or desire to be the best friend possible, right? And like you said, those circle checks, like if we get to 2026 and you realize that, hey, I started up 2025, but this person who was really in my corner, but something happened where maybe it was jealousy or they didn't get the same type of return, since we're talking about money that I did, and they feel some type of way about it, then you really have to make a hard decision to get rid of them out of that circle. So I think it's just the self-awareness piece of realizing who has the best interest for you, but also having good people around you that can identify people that aren't serving your best interests and really trust that they're thinking as well. So like you said, it's a constant pulse check internally, but if you ever get in a circle around you, I think that your friend, the real friend, should be able to identify who doesn't have your best interests around.
Here in the Elevate Collection, we always ask every guest, like, what's one thing that us or our community, the viewers or listeners out there, what's one thing we can do to elevate your life from maturity to forward? So, like, what's your one thing as?
Yeah, anyone that's learning or wants to learn more about alternative investing, I think would love to have a conversation, right? Like, I don't want to solicit investors and income, but I think there's a population.
We are Java boys.
But I think there's a population of athletes out there that are very curious about this space and maybe don't know where to go, right? And anybody who wants to have a conversation, I would love to have a conversation. I love talking about the space. I love talking about the industry and all the opportunities are out there. And so anyone that wants to have a conversation, reach out, let's talk, lunch, dinner, what have you, and we'll go from there.
That's perfect. Are you looking for new opportunities and a new, like if somebody has a super cool app, like, can they talk to you about that?
Yeah, absolutely. I think the network that I squad is my first investment was a venture. So I know a lot of folks that are looking for strong companies to invest in. So if it's someone that has a company that's looking for advice on, hey, how do I approach venture investing, or who in the venture space would invest in this, happy to have those conversations as well. Like as I touched on before, it's not what you know, it's who knows you. So the more people you can talk to and the more your name can be socialized in the right circles, the better.
We appreciate you sharing your wisdom, your kindness, and your toxic traits of being my name Earth. No, but thank you so much for joining us in the podcast, Fred. We are so grateful to be connected to you.
Thank you guys for having me.